Hi everyone, my name's Ian Allison, cover mainly enterprise blockchain for CoinDesk, and we're really lucky today to have two experts on financial market infrastructure, Michael from the London Stock Exchange and Rob from DTCC, and I'm going to let them introduce themselves. Off you go, guys.
Hi, Mike Coletta from London Stock Exchange, although don't be fooled by the accent, I am based in London. I've worked on blockchain for about 4 years. Previously, I was at CME Group, working on a bunch of blockchain-based projects and post-trade stuff that no one would be interested in here. And then moved to London Stock Exchange about 2 years ago, heading up that strategy and how we apply the technology to our capital markets business.
Good afternoon, morning, afternoon. Good pre-lunch, so everyone wake up. Rob Palatnik, I'm the chief architect for Depository Trust and Clearing Corporation. I've oversee architecture and strategy for pretty much all of our systems, ranging from our legacy mainframe environments to our distributed cloud, robotics, artificial intelligence, and distributed ledger. I'm an evangelist for our blockchain efforts, and I'm also a harsh skeptic and critic of some of our efforts.
Good stuff. Well, just when we were preparing to come out here, you guys were saying to me that people understand banking, they understand fiat banking, some of them understand a bit about central banking, but when it comes to securities, people don't really understand so much about how they're sort of banked, and this is what CSDs kind of do. And back when blockchain first broke onto the scene in Bitcoin, like a lot of other financial infrastructure, people thought this is going to be disintermediated to hell, and I think that over the last few years it's been much more a case of you guys have embraced it, and I suppose the question is, like, how are you kind of embracing it, and how's that process going? And so I don't think nobody's going to be out of a job here. You're going to play an integral part, but talk about how that's
So I mean, we can start. Yeah. So at least at London Stock Exchange, right, we're focused on a digital asset strategy. So rather than these kind of large, these data and logic workflow type use cases where you're quote unquote ending reconciliation, you're still kind of crossing the existing system stratospheres and then integrating this workflow with blockchain. Rather, we say, well, where did blockchain work in the most basic sense in the first instance, right? So you could argue that cryptocurrency was obviously a perfect use case and the simple and very clear representation of a digital asset. So the fact that you could actually electronically represent this asset as if I could email you a piece of cash or a stock certificate, right? So taking that strategy forward, we're focused on financial market infrastructure for digital assets, right? So just taking that same philosophy. So rather than focusing on data and representing the instruments that way, we want to represent them digitally. And also understanding the market structure and regulation that's necessary and that you actually face in order to adopt these digital assets, right? Nothing necessarily changes because you introduce blockchain into the mix. It's almost irrelevant in that case.
All I was going to say, Rob, was the project I'm most familiar with is the trade information warehouse replatforming, to use that term. But yeah, just talk about what you guys are doing, what's cooking.
Sure. So I'll say, when we first started looking at this space, first I'll admit we were a little bit surprised because we thought that when we took paper certificates and put them into digital form onto the computer, zeros and ones, that we had digitized things. Then we found out from reading in the media that we're an analog, old school process, that if you're in the mainframe or if you're in one building, you're not digital enough. So we started looking more at the technology, and I think once we started understanding, and it's still a process I think for all of us, but understanding what the technology really brings and where the different value propositions are, we started looking at where the right opportunities would be with our clients. So the single version of the truth, and that version of the truth is immutable and can be shared by appropriate security and privacy mechanisms, is where we really saw a tremendous amount of value. The industry, at least at this point, has a number of considerations. Regulators aren't going away. Governments aren't going away. Right now, there's a lot of discussion around different models of identity. but know your customer, anti-money laundering laws aren't going away. So all of that meant we needed to focus on, I'll say, a contained network. So we're looking at blockchain in a permission sense, but I will say the range of asks from our clients have varied, all the way from, why can't you replace the entire equity processing system, next week with a distributed ledger, to some of the more ironic requests where firms are now coming to us saying, well, we're worried about this new ecosystem and all of the wallet and exchanges. So we've got these little pieces of paper with our cryptographic keys. You guys are really good at vaults. Can you stick this in your vault? Oh, and so the request, and this is taking a digital technology and moving it back to analog in our old vault. So that the range of requests is fascinating. What we are doing, in short summary, is we are taking a mainframe system, which is a central ledger for credit default swaps that was implemented over 10 years ago. And it was time for a refresh of that technology. The industry and the leaders of that segment of the industry said this is a really good opportunity to take something that's very well defined, has a very well defined workflow, and can benefit from information sharing, and put that on a distributed ledger. And that's what we're pursuing right now.
And I just wanted to say, with regard to that, I know that you've reached a testing phase now. Barclays is one of the banks, and the rest, there's 15 others or thereabouts. And I just wondered, without totally holding your feet to the fire, is that going to be, we're looking at a 2019 type thing for that?
We're still on target for a 2019 delivery. There's multiple pieces to this. There's parts of the ecosystem, and there are some other partners who are also upgrading their system. We get match trades from IHS Market. So they're upgrading their systems. All of our clients are impacted by the Brexit timing.
Interesting.
And that was supposed to happen in March, and it was supposed to happen whenever. Whether firms want to time things out. But we're proceeding. We're well through functional testing, and the system is behaving as functionally expected. We're doing a lot of non-functional testing, and that's really where all of the technologies are meeting the reality of what infrastructures require in terms of safety and soundness. So we're pushing hard on the capabilities of tech.
A fantastically ambitious, one of the biggest blockchain projects in the financial system, and top marks, good stuff. And Michael, the stuff you've been doing, I think, is really interesting with the UK regulator, the Financial Conduct Authority, a bunch of interesting companies, tokenized equity, how that works. Do you want to dive in a little bit?
So I think one of the interesting things, and this is the question I think maybe many of you guys have seen, in the audience at least, I've been posed this question countless times. Security token or tokenized security? Answer, irrelevant, right? Completely semantic, right? Let's just review for a moment, right? Let's not forget and let the technology cloud us away from the realities that we're facing, right? Security, legal. Token, technology. Just like in today's world, securities are represented in databases. So I could say security row in a database or row represented security. Which one? I don't care. The point being, right, that just because we've introduced this technology that supposedly disintermediates these pieces, it doesn't actually, because of the kind of fundamentals of how markets work and the kind of protections that need to be in place around market stability, right, you have certain entities that are required, and it doesn't remove the entire, blockchain doesn't introduce a legal change in the understanding of what an asset is. And I think that's an important distinction though, right? So, many times with the early stage use cases around blockchain, we kind of started blurring the lines between, well, what is this token concept introduced to the asset class itself? And the reason why that was happening was, and if you think about it, is legally what was going on was, there was, because you weren't, for example, in the security space, because you weren't perhaps using a CSD to represent or dematerialize, right, the security, you created a legal structure and used blockchain, which kind of blurred the line. It was like a security wrap, custody structure, token. So I think, that's one of the things. So we're focused really on, on end-to-end integrating the flow of the digital representation of those assets. And again, we start with, where blockchain works best, right? Where little or no infrastructure exists today. So, if you look at the small to medium space in finance, right, screaming for solutions in different ways and in different senses. And that's really where kind of our, one of our main business areas is, right? A stock exchange helps companies raise capital. It scales, when you're looking at large companies, scales up fantastically. But when you start moving down the scale, the cost's much higher, and the availability to access liquidity, right, and capital raise, the costs are much higher. So perfect starting point.
It comes. Can you hear me?
Yeah, there you are.
It comes with the regulatory as such with the FCA.
Yeah, I would say. Well, the other thing, I think the one thing to keep in mind, and I'm part of this European Union Commission expert group on fintech, essentially. So it's like, how do we change laws in Europe, right, the regulation in Europe around financial markets to enable different types of technology, not just blockchain. So the interesting observation I would say on the reg front, right, is that the whole point of regulation, right, is that it's, fundamentally it's there to protect against certain principles. So if you ripped up the regulation, you still remain with the principles that, like, for example, you don't want to see your grandmother invest $100,000 or euros in some company that she knows nothing about and lose all of her money, right? Like, you don't want to see that. That's consumer protection, right? So long as the technology is able to provide consumer protection, as an example, then we say that the technology, well, it could satisfy that. But I don't think you can't blockchain your way out of understanding a business plan or a prospectus, right? So there's a lot of specifics here. Just one statement, though, on regulation is the principle they take is same activity, same risk, same rule. So it's like, what are you doing, right? What's the risk? Same rule applies to you.
Good stuff. And Rob, on that same kind of theme, you guys did a white paper just recently about security token platforms and how they should have the same characteristics from a regulatory perspective as other trading systems. And so that seems kind of logical. I mean, are you kind of trying to contain something? How do you feel about security tokens and all that kind of stuff?
A large focus, well, first I agree with everything Mike said, okay? So I think, the tokens, so tokenized securities, security tokens, I think there's a lot of semantic dancing going on. Okay. I think the industry trying to avoid regulation has been at its own peril. I don't know that it's necessarily helped things. Our perspective and what we're trying to do as an industry utility owned by the industry for the benefit of the industry is really threefold. One, trying to gain real experience and move a project forward with the industry and the network that we bring. Second, as our work in open source, our work with Hyperledger, our work with a number of the vendors, publishing information about performance benchmarks. So working with the technology and the open source industry itself and figuring out where this technology should be commoditized and interoperate. And then working with the regulatory community and the government bodies. We're part of the Chamber for Digital Commerce. So working with government organizations to get them educated and understanding and get us all on the same basis so we're talking the same words. So the white paper recently published was, I believe, is phrased guiding principles for post-trade processing of tokenized securities, was really how to think about, and it was to the industry and to the regulatory community after we were asked to provide some opinions, is how to think about applying today's rules and regulations to this new set of technology and new set of platforms and capabilities. Among the issues are a number of them that Mike mentioned, but also just basic smart contracts. Smart contract is a legal term. The contract word is actually managed and governed by state. There isn't a federal rule around smart contracts, so bankruptcy and bankruptcy courts and the meaning of finality in a contract, those are all local laws that govern that. So you either have to have harmony among many different places, or you have to start coming up with some common definitions, some common taxonomy, and some common meaning.
Referring to this kind of these vagaries and differences in regulation, I mean, maybe totally off the mark here, but one thing, obviously I'm based in Europe, Is Europe more kind of token mad than maybe some other jurisdictions like the US? Because I say Europe and Switzerland, because you see SIX, for example, you know, they're on Corda and they want to tokenize everything. They want to have, you know, I just wondered, maybe in the US, people are taking a more cautious approach, and maybe the same in Australia, we're looking at kind of, you know, just doing some DLT plumbing. I mean, do you see a difference between these places?
Well, so, I mean, let's just remember that, you know, so I'm actually less of an expert in US regs, but no, in Europe, just as a principle, right, they have harmonized financial market regulation, right? So when we say security matter, you got to make some distinctions in Europe as well, remembering that Switzerland sits outside of
They're laws
Europe,
themselves,
right?
Yeah.
Under that kind of jurisdiction. And also you have kind of these, I think the thing to keep in mind too is because you'll see a lot of headlines coming out of Gibraltar, Malta, Liechtenstein, right? And I think, you know, so to a degree, because of the markets are harmonized and there's a technologically neutral approach to European regulation. So it's to say, I'm not going to make blockchain regulation because why should I make any kind of specific technological regulation, right? It's really about, you know, you should be able to do what you do and carry out those activities, and we maintain those same principles like protecting consumers, maintaining stable markets, those sorts of things, right? So it's almost irrelevant. I think, again, so because of the harmonized financial markets, we're almost running out of time. Because of the harmonized financial markets, I think that, you know, and technologically neutral approaches, it's easier to tokenize things, but it's still under that same structure, right?
I'd add the point that Switzerland and Australia and some of the other global markets are vertical. Okay? And that's really important because they do the trading, they are the exchange, they do the clearing, the settlement. In the US, the markets are horizontal. We get trades from over 50 different exchanges. You could cross-list an asset at any of those exchanges. And when you put in an order, if you're a retailer or an institutional buyer, you have to get routed to the execution market of best price. Okay? So all of that happens within nanoseconds. The trade is executed within milliseconds or microseconds. It's submitted to DTCC. Usually within that same microsecond, we validate it and send back acknowledgement, and you have finality.
So one point on the vertical versus horizontal integration. So what are we actually doing with blockchain, right? So you probably ask yourself, well, great, you know, you guys are applying blockchain, but it's still the same market structure. Remember, like most of this stuff, like you can't merge all the banks, the CSD, and exchange all together in one. So blockchain, what is it really doing? It's a thin layer that is simulating, virtualizing vertical integration, right, in a common workflow. That's really the power, right?
So I'm going to invoke my power as moderator, and I'm going to ask you one last question. It feels like we're just getting started here. You could talk about this for a long time, and we've run out of time, but quickly, 5 years down the line, with reference to the title of this panel, how's it going to look with CSDs, blockchain, tokens, all that stuff?
I mean, I would hope to see that basically that there is a pipeline in many markets, right, that allows for kind of seamless flow of issuance, safekeeping, and trading, right, and there's a thin layer established. Maybe not at a transnational level. So, you know, when we look at like cross-border, that's a bit more complicated, right? But I would hope that there would be a lot more examples of the kind of so you'd see a lot more examples of the seamless, like, essentially, like what you were able to do with ICOs, but not, right? Like in the mature market space.
I've often said you can send a 3-year-old precocious, really smart kid to college, but he won't do well because he's not socialized. He hasn't had sand kicked in his face in the playground. You know, the technology's got to grow up just like people have got to grow up. If you look at any technology cycle, and we've all binged on the hype cycle of technology, whether it's mobile, whether it's internet, whether it's databases, 10 to 15 years is often the magic when you hit that inflection point, the killer application comes out. We're just 10 years into this journey. I think we're looking at it that DTCC and many CSDs roles will likely change. Probably not in 5 years. Right now, you're just layering on a new level of infrastructure, and if anything, adding a new layer means you're adding reconciliation. You're adding operational costs. The discussion around why isn't there interoperability now? There's nothing to interoperate. Okay? You need a bunch of real implementations. Then you'll figure out what interoperability actually means. And all right, I need an asset here. I need a payment here. I want to exchange a security loan here. I want to do financing. then you'll figure out interoperability because there'll be business requirements. Yeah. So I believe that our role will change. I believe the necessity of having a single mainframe and a single ledger for many of the financial markets will change. What that will look like, I can't tell you for sure, but I know it'll evolve. What I do know is there will be a clear need for governance. There will be a clear need for an adult in the room that when things go wrong in the financial markets, which are fully automated because these smart contracts that are still programmed by humans have issues, somebody's going to need to fix them. And that's pretty much where many of the critical infrastructures probably see their role.
Yeah.
Awesome.
Yeah, probably some probably unbundling like you see in banking a little bit.
A ton of expertise there. Everyone, a round of applause for these guys.